We appreciate all of y'all being here on early this morning, and the Southeastern Regional Row Crop Initiative are glad to be able to bring this to you, and we're just happy that we have Dr. Mark Welch and Dr. John Robinson agreeing to put this on for us and bring us some good information. Also today we have Wayne Cleveland, who is the Executive Director of the Texas Grain Sorghum Producers Board. So we're happy for him to be with us this morning. Also, before we get going, if Lindsay, you'll put our sponsor page up. We're grateful also for the support of the Texas Corn Producers Board and the Cotton Board, and as well as the Texas Grain Sorghum Producers Board for being sponsors for this program. So, like I say, Matt will be looking at the chat. So if you have any questions for anyone this morning, we just ask that you type it in, and Matt and I both will be looking at that chat as we go along and answer the questions. So I know Dr. Robinson's ready to go. So we have Dr. John Robinson, who's the Extension State Cotton Marketing Specialist, and we'll turn it over to him.
It says my screen sharing has failed to start. Maybe we should switch to Mark Welch.
Okay,
sorry.
We can do that.
Okay, sorry about
Mark,
that.
are you ready to go?
Do that. You bet. Let's see if mine will load, and John will circle back to you then.
Okay.
Do appreciate the opportunity to be with y'all today. Have a quick update on maybe some fundamentals that are going on in the grain market. And then we'll talk about maybe, I think, kind of where prices might be headed, maybe some good news, maybe some challenges still facing us. Obviously, we're still working through this supply-demand disruption caused by the global pandemic of COVID-19. We've got way too much of some stuff in one place. It's either in the wrong place or the wrong form that it needs to be for our consumer markets. And of course, then some scarcity and very high prices on other sides and other places. So we're still sorting that out, but are making some progress to some degree. This is what price changes have done. If you go back comparing prices today, back to the first trading day of 2020 on January the 2nd. To this point, food grain prices have held up pretty well relative to some other commodities. Now wheat has fallen off the last couple of weeks. Rice prices are basically where they were. So we're seeing countries that are worried about domestic supplies, limiting exports. That's been given some degree of support for food grains. We're seeing soybeans that have held up relative to corn and cotton. Actually, corn prices now have fallen more than cotton has. If you compare that price back to early January, milk, which was down some 30%, has made a complete recovery from where it was back in January. Hog market is still down. Cattle have somewhat of a rebound as well. Crude oil was down 70%. Now it's down about 50. The stock market was down 30. It's down about 10. So there is some recovery in some of those markets, but from the feed grain side of it, how are our customers doing? There's still a lot of pain out there, and there's a lot of concern. Our feed grain customers are still hurting, and obviously on the fuel side. And if there's one picture, I think, that summarizes the difficulty in the corn market, it's this one right here. That would be gasoline consumption. And so obviously the fuel component of feed grains for ethanol, when you drop gasoline consumption, now we don't need as much ethanol. And for that old crop marketing year, we've got a lot more corn than we thought we were going to need. You can see the estimates from the Energy Information Administration. Current projections are that April is going to be the pits of this drop, that we will see some recovery moving to the end. And I track this with the corn marketing year. Back by the time we get to August, they project gasoline consumption will be back where we were back in January and February. Obviously, that'd be very good news for the grain markets for that fuel component for grain use. This is weighing on the corn market specifically as well. The prospective plantings report estimated farmers. We're going to plant 97 million acres of corn this year. That's a big increase of supply in a marketing year when we're looking at some struggles on the demand side and increasing carryover. So that's some challenges for us. Just a quick table, and I'm going to go through this pretty quickly. You can see kind of USDA's numbers for the 2018, the 2019, and then their first projections for 2020. And if you're looking at a price forecast for 2020, USDA put a season average farm price, you can scroll all the way down to the third line from the bottom, of $3.20 a bushel for new crop corn. And that's based on that 97 million acres planted and a yield of 178.5. Converting that season average farm price to a futures-based price, in my models, that's about 328 on the board, kind of where we might be headed given those kind of fundamentals. However, a lot has changed since that prospective survey was taken. And so I think the likelihood now is that we will see fewer acres. Let's say we planted 94 million instead of 97 million. Let's plug in a yield of 175 instead of an all-time record high of 178. That then scroll on down to the bottom. That then gets you a futures price of around 350, which is still above where we are now. And so we've got a lot to determine acre-wise and yield in light of all the demand considerations as well. So there's still some uncertainty ahead of us, which may give us some degree of price support, at least for the next 30 days. And I'm glad that Wayne Cleveland's on the call, and he can talk a little bit more about what's going on in the sorghum market. For 2021 marketing year, yeah, ethanol use is down, feed use is down, but we're seeing that rebound in exports. That would be the best export number in the last 3 or 4 years. And so that's certainly a bright spot when it comes to one of our grain markets. And then sorghum prices. Yeah, we're being pulled down by what's going on in the corn market, but those elevator bids are on par or much more close to the corn market. So that normal discount that we see with sorghum in many markets, that has diminished or certainly shrunk, and even to a premium in some markets. And then at the Gulf, as corn prices have come down, as sorghum bids at the elevator have struggled, we're actually seeing prices at the Gulf have increased over the last couple of months. So certainly some buying interest there for sorghum. Looking at the drought map, a month ago, 2% of that north central region was showing some degree of drought, and that was way back in the little corner of Kansas. That is starting to expand, not critical levels yet, unless you're farming in southwest Kansas, but that's something we'll keep an eye on, and certainly has some yield impact moving forward. So where I think we're headed on the feed grain market, acres are going to be up. The question is how much. I think energy feed will still be supported by our livestock market rebounding. With ethanol production down, we don't have as many DDGs to feed. So that's likely to increase grain consumption as well. Fuel use likely to rebound next marketing year compared to the cuts currently. Exports look pretty good. All that said, the stocks-to-use ratio for corn is likely to be higher and price is lower. We'll still sort through the recession impacts on the global economy. Disruptions and uncertainty around trade could undermine many of the gains that we've kind of struggled and clawed out over the last couple of weeks. So that still hangs over us. And then, of course, weather moving forward. Just kind of where I think we might be moving over the next several weeks and maybe months. I hope that we are carving out a bottom here in this market around this 330. Wouldn't take much to break that little trend line. But if I had to put a price objective of where we might be next of getting something done price-wise, I think 350 corn, which is where I think we'll be next fall, given the outlook that I just gave, I think would kind of put us in a pretty good place. So there's some things we could look at, with put option strategies or some hedging. I would hold off at this point, and see if we can't get just a little bit of price strength into here. But again, the fundamentals are pretty overwhelming at this point. To see a significant price gain unless we get into a real weather problem. So that's what I brought to share today. Be glad to take any questions or comments moving forward. Appreciate the time and appreciate y'all being with us.
Thank you, Dr. Welch. We greatly appreciate it, and good information. And just trying to move on a little faster, we'll just go on to Dr. Robinson, who's state, like I said, state cotton marketing specialist with AgriLife. So Dr. Robinson, take it on.
Okay, I'm going to need Mark Welch to keep control and share my slides. He has a backup copy, and I'll just
All right,
talk.
John, you bet. I'll get that there for you.
This is what you call risk management.
So
I can go ahead and fill in a lot of what you heard Mark discuss in terms of the demand disruption is also the case with cotton, but more so. It's more so because cotton is more of a discretionary type of product, or apparel is. Go ahead and flip to the next slide. So this is the main thing. You know, if we were giving this talk 6 months ago, we talk about all kinds of things influencing the cotton market, but this is the main question now, and that is, what is the effect of the recessionary drop on apparel and home furnishings consumption? And we've got actually two things working here. One is we have entered, more than likely, a recession. It's projected to last, by these people, to last a year or so. And recessions typically have negative effects on cotton consumption. But we've got a second wrinkle here, and that is the quarantine effect. We got the recession effect, people not having jobs, people worrying about money, people losing their consumer sentiment. There's that. But then there's also the physical effect that people are sheltering, sitting at home, quarantining, sometimes under law. And we have never been in that kind of a situation. So the double effect of the loss of income, the loss of wealth, the loss of consumer confidence, and then physically sheltering at home is something that we're going to have to see play out. But I can only imagine that in cotton, in apparel, in home furnishings, those sorts of products are going to take the worst hit in this compared to other ag products. Go ahead and flip it to the next slide, and I'll show you a little bit more evidence of that. So we're expecting disruption. Go back, if you would.
sorry about that.
It's all right. We're expecting disruption. The evidence that we have so far is in the April retail sales that came out last week. We saw month over month, we saw a 79% drop in retail apparel store sales, and it was the largest drop in any category of what was a rather poor retail sales report. The clothing stores took the biggest hit. And again, it's, you can imagine why. Clothing is not essential, and this is just not the time for people to go, buy new wardrobes. And so there's the evidence that we're going to see play out, and it's going to go all the way back up the supply chain, no doubt. So it'll be it already has affected yarn and lint markets. In terms of export sales, we've seen a few weeks where we had some canceled export sales, which is kind of what you'd expect to see. And then we saw some weeks where actually we had booming export sales because a quasi-government entity of the China buying for the Chinese Reserve was in the market buying lots of cotton, buying hundreds of thousands of bales of cotton. But the trouble with that is, I'll take that, and that gave some lift to the market. But that really wasn't, I wouldn't call that fundamentally relevant, because all that is really is shifting stocks from outside of China into China. It's not really a reflection of commercial demand. And the last way that we've seen this disruption is in the forecast by USDA. Go ahead and flip it to, this next slide shows the month over month changes in the April WASDE, which was the first WASDE report that came out after a lot of this disruption was settling in. And basically these are showing you large reductions in expected world consumption. That's down 6%, and expected US exports were lowered 9%, and ending stocks, with production not changing, we're cutting consumption. Ending stocks are projected higher to bearish levels. That was the April WASDE, and we saw more of that in the May WASDE. Go ahead and flip it, Mark. Now, interestingly enough, we had those bearish numbers come out, futures have fallen 18, 20 cents from the low 70s to the upper 40s. And then they've recovered. They've been on a recovery since April the 1st. And that WASDE report came out second week of April. And as bearish as those numbers were, the futures market didn't sell off. The fact is, it went up a penny I think for a few reasons. One was there was a temporary effect of this Chinese buying that was in the market, and we'll take it. It helped lift the market. But like I say, it's not a long-term fundamental kind of influence. There's also some, I'll call it futures market dynamics going on with the July contract. There happens to be a short supply of tenderable qualities against that contract, so people can't deliver physically and pull that market down, and there's nothing to rein in people from running up the futures price. And so that's been giving a little bit of lift to the July contract. But again, I'm going to call that a temporary effect, because when the July contract goes off the board, I think we're going to basically see the fundamentals of December new crop settle in, and those are bearish. There's also been just a lack of selling by commercials, a lack of selling by short speculators. And so between the lack of selling and what buying that's been happening, that's given us the lift and supported prices where they are. But fundamentally, I don't see any reason for us to be trading outside of the 50s. And that's where I kind of expect old crop to keep ranging. And that's where I expect new crop to range too. Go ahead and flip it to the next one, please. So here's the projections of old crop is the left column of numbers, and then the two right-hand side column of numbers. The middle one is USDA's, what they put out for the May WASDE, and actually the far right one's not there, but mine is similar to what USDA is projecting for new crop, and that is basically if we're carrying in a huge amount. We're carrying in over 7 million bales from the 1920 crop. And so, whether we plant over 13.5 million, or my numbers would plant it all the way down to 12, it almost doesn't matter. What's influencing this is the huge carry. And so if you have any kind of a decent sized crop and we're carrying in 7 million bales, we're going to have more than enough supply. And we're going to wind up with ending stocks that are, basically trading kind of similar to the previous marketing year at a very high level. And that's just a recipe for more of the same. It's a recipe for continued stocks or prices, futures in the 50s or so. I don't really see what changes that, short of some kind of widespread disaster, which I certainly don't wish on anybody. Flip it one more time for me, please. Mark, go ahead and advance it. There we go. So just in closing, I'm looking at weak prices, weak range bound trading. The demand part of this, I think, is going to be with us for a while, because I think it's going to take a long time for consumer confidence to come back. Even if they solve the medical problem, it's going to take a long time for consumer confidence to come back. So I think we're stuck with range bound prices that are going to be kind of what we're seeing now. Flip it one more time for me. And go ahead and advance all the bullets. There's 3 bullets, I think. So, in terms of marketing, if futures are at 58, they can rise maybe over 60, and they can get into the low 60s, but it's almost no man's land, because, it's still not profitable levels. And all it's really doing is whittling away at the government support that we have in terms of, LDP payments right now are paying, 4 cents or something. And seed cotton PLC payment rates are probably maxing out. If I hate to say this, but if futures decline to the lower 50s, those government payments will expand a little bit. And so I don't really see any sense of paying for put options or, paying for anything to provide downside support. We've got downside support down to the lower 50s. If the market falls down to there, then maybe somebody could think about hedging their government payments and buying calls and call spreads or something against that. But otherwise, I don't think there's much to do except, do your best to be efficient, save money on your inputs, hopefully have Mother Nature cooperate and make enough pounds combined with the government support to get us through with financing for next year. And so that's basically it. That's all I've got.
Okay. Hey, Bob, we've got a question in the chat. I think it's going to be for you, Dr. Welch. It says, what's the current corn crop conditions in the Midwest, and why did you bring the projected yield down?
Right. That projected yield that I used is just a straight trend line projection based on, I use a trend line going back to 1960. And if you do that, it comes in at about 175. USDA, with their modeling and adjustments that they make, they just came in a little above that. And so they set their target for the new year at 178.5. I can't explain how they got their numbers, but mine is more of with normal kind of conditions that we might see something a little below that. So that's the only explanation that I would have for the difference in the yields. And then, of course, in terms of the conditions of getting this crop on the ground, we're getting it. We're on planting pace. Everything looks fine. As that drought map showed, we are seeing a little maybe creeping up from the southwest way early. But I think it's something certainly to keep an eye on. Watch North Dakota. They're way behind well, they still haven't got last year's crop harvested yet. And they're still way behind getting this year. And we're talking about 3 million acres in North Dakota. Already hearing talk of prevented plantings going up again in that state. So that could hurt our acreage projections as well. So there's just a lot of uncertainty, not huge numbers, but if we're trim a few million off of acres and just a bushel or two off yield, the fundamentals do improve considerably from USDA's numbers that they stuck in the May WASDE.
Thank you, Dr. Welch. So next up to finish out our program this morning, we got Wayne Cleveland. He's the Executive Director of the Texas Sorghum Producers Board. So at this time, we greatly appreciate y'all's support and appreciate you being on with us this morning. So if you go ahead, Wayne, and take it away.
All righty, can you guys see my slide here? Am I good?
Yes, sir.
Lindsay, can you see my slide? Okay, all righty. All right, appreciate you guys hopping on, and Lindsay, Bobby, Matt, appreciate you guys putting this together. Here is my contact information if you guys want to visit a little more about this. I'm going to try to move through these things pretty fast. Of course, all things are kind of focused on China this year. I'm going to go through these things really fast here. We've assimilated these over a couple of days. Our consultant in China sent some good information, as well as Patrick Wade that works for us. I think probably the most important thing is to look at that top slide. The current price of corn in China is around $7.35 a bushel. That is hard to fathom that is that much, but you get into the fundamental argument in China of, they're protecting their corn growers. So for them, $7.35 seems to be a pretty rational price. The odd thing is, even at $7.35 a bushel, it's still more economical to import Texas grain sorghum into China. So what we're seeing is a lot of our grain sorghum move in there as China goes geographically. The corn's in the north, the animals are in the south, and the baijiu is generally produced in the center. The baijiu, which we think maybe 20% of all grain sorghum exported from the U.S. goes into, certainly a very important market. They're willing to pay a premium. Making liquor out of sorghum, of course, you end up with a bushel of sorghum, you end up with thirds, a third distiller's grains, a third liquor, and a third CO2. So when you end up with about 3 liters of baijiu that you're selling for probably a minimum of $50 a liter, you're looking at $150 return per bushel. So kind of gives you an indication of how important baijiu is. It's still more economical to import that corn. The transportation is just horrendous in China. Getting it from those northern provinces down to the Guangdong province, where a lot of animal production is extremely expensive. They don't like to do it, so that's where we come in. This live hog margin in China is crazy. It's 10% year over year. It's gone down about 7% the last week, but that still equals about $3.51 a kilogram, or roughly $1.70 a pound in margins. So you're looking at producers making $300, $400 a pig still. So they are increasing their swine population. We've heard few rumors of African swine fever returning, but we think for now on they've got the pedal to the metal, if you will, and they're increasing their swine production as swiftly as possible. Probably the most important thing if you're a grower to look at is there is no TRQ on grain sorghum going into China. There never has been. We hope there never will be. In comparison, corn has a 7.2 million metric ton TRQ on it. Metric ton again is about 39 bushels. So it stops corn from going in. Again, they like to protect their local corn growers. So that's the reason they have that TRQ in there. Just to get a grain into China is around $14, which is 14%. I'm sorry, 14%, which is pretty steep. But if you add a TRQ after that, which is generally pretty steep as well, you get up into the 30, 40% range. And then keep in mind that there's still a 25% retaliatory tariff going in on everything that goes into China. That's being released commodity by their government, but the retaliatory 25% is still there. They're still talking about 2 million metric tons of increase in the corn TRQ, but again, this is China policy, and it's pretty hard to discern. Of interest is that 60% of all China purchases are the government agencies purchasing those things. So again, when you get into these TRQs and you see that 60% of that is bought by China government, it doesn't mean they bought 60%. It means they can buy 60%. And for the part that they don't buy, sometimes they release it to the private industry and sometimes they don't. The private industry generally, as a rule of thumb, buys all the leftover grain sorghum that they can get as well as all the leftover corn. So today's spread on corn versus sorghum in China, I've got a spreadsheet slowing down my computer, but the difference in China, corn versus sorghum is 143%. That stands pretty true for FOB Corpus Christi. What I'm seeing in the general trend is this is very, very similar to what's going on in 2015. I feel like 143% is the very upper end of what China is willing to pay for grain sorghum and corn as well. So we're there. If you're a grower, proceed with caution. There is a tolerance out there where they'll switch over to U.S. corn and go ahead and pay those tariffs after the TRQ, but it seems to be 143%. We're still pretty safe. PS&D is important. We have a liquidity problem. We think we're out of grain sorghum right now. We thought there were about 130 million bushels left over old crop. I'll switch through some numbers here that Patrick Wade put together for me, but 5.8 million acres nationally and 1.8 million acres in Texas. Given what China buys, I don't think that's enough acres. Vietnam, our pesticide PRF was completed in April thanks to NSP and USCP. That'll be a great market. It's one of the hottest markets in the world right now. They're reviewing all sorghum exports there, and they'll start allowing those in. And again, you're looking at two guys that can help you in all this stuff. The Chinese have become extremely good at buying grain sorghum. They are not going to buy copious amounts of grain sorghum at harvest. So give Dr. Welch a call or give somebody a call. This thing gets really complicated really quick. I'd encourage you to take a look at our newsletter from the April edition. This is what Patrick Wade puts together for us. I think it's probably one of the most comprehensive, approachable articles on what's going on with China and grain sorghum right now. Patrick, a great amount of talent. He put it in here. And if you're interested in China and what's going on with grain sorghum, this is it. I can send that out, or I can send a copy to Lindsay. But it's a really good, easy to read what's going on in China. Just for fun, this is kind of interesting deal that we put together. This is just hypothetical, and I put this up for grins. Given the trade deal, we kind of tend to forget about that, but the trade deal is pegged at 36.5 billion. That's roughly half of 80 that's supposed to be there. You guys can take a look at it here, and I've got the sorghum numbers highlighted. If they purchase a pro rata share based on those purchases from 2015 to 2017, With this trade agreement at $36.5 billion, they'll need to purchase 7.2 million metric tons of grain sorghum this year. That has a retail value over there of 1.2 billion. That's unbelievable. The other commodities are up there as well. Please do not, this is not the gospel. This is our guess. This is a lot of fun. But you can see if they purchase their pro rata share of what they're supposed to in this phase one agreement, they've just sucked up probably about 80% of the grain sorghum in the United States, which is about equivalent to what they did in 2015, 2016. So the prices are down there at the bottom as well as the percentages. But again, this is just a lot of fun. We're supposed to produce 9.5 million metric tons. I'm going to skip that one. This is our weekly export tally that Patrick keeps up with. There at the bottom, you can see new sales is 1.6 million metric tons, which we think is about half of what was left over. In bushels, that's 65 million bushels. So roughly, we think there may be about 40 million bushels left out there for sale. We think it's going to get picked up. The last numbers, the weekly exports. I'm having a hard time getting my cursor over here. I can't see the last one, but I think that's what's actually been sold. So boats are moving out to China, as well as we sold 2 new boats into China this year. So that's important for new crop. Those are delivered in, I believe it's the start of the third quarter. So we're seeing China buying the new crop, which is very optimistic for us. This is the grain that moves through Texas, and the year you can see at the top row is the year, the bottom row is the percent that goes through here. We have got to keep our ports healthy. We lost interstate grain, but we're still seeing that, right now, 80% of all grain sorghum moves through Texas. That's a key issue with our organization, as well as our national organizations. We're currently working on a couple of projects, but keeping those ports healthy through all of this COVID, as well as everything else, is extremely important to the Chinese. And I'll finish on Baijiu. This was supposed to be a funny picture of me doing some serious research on Baijiu in central China. It is not good. That smile on my face is a little facetious, but if you will, Baijiu is the most consumed alcohol in the world. That's pretty interesting, but when you look at the population, indigenous part of it, so you have to have grain sorghum to produce Baijiu. There's no step around. It has to be put in Baijiu. It's not the prevalent ingredient. It's just an ingredient in Baijiu. It's a complicated mix of grains. We did a study with the United Sorghum Checkoff Program, kind of tried to dissect that, but you get into some pretty dicey stuff there, and you get into some old family recipes. But sorghum basically provides that aroma, and as a guy told me, it's similar to agave to tequila in Mexico. If we don't have agave, we don't have tequila. So still, that's the very base market for grain sorghum. In China is that Baijiu market. Again, they're willing to pay a premium for it. So you guys go out and buy you a big bottle of Baijiu today, drink it up, and encourage your friends to drink it. You're tough if you can drink Baijiu, but we do look forward to getting back on the road into China. We've got groups lined up to go to China and to Vietnam in the second half of this year. Our work continues, as well as getting folks back into China. So again, I appreciate the opportunity to be on. Lindsay, Matt, Bobby, if you guys have any questions, please feel free to give me a call.
Thank you, Mr. Cleveland. We greatly appreciate everyone joining us this morning. We will be sending this link of this program out amongst our network of extension people in this region. Also, I'm assuming we can probably send the China newsletter deal that you, the information that you posted there with our link as well. But other than that, anyone else have, Matt, you got anything you need to add or?
No, sir. We just we thank everybody for joining us this morning, speakers and everybody, and we look forward. This is a monthly thing, so we will be doing it the third Wednesday of the month. So we look forward to seeing and hearing from everybody each month as things progress in the growing season.
One last thing, you see our emails here, but for any of those that are listening this morning, we would appreciate any comments, suggestions of whether we were too short, too long. What do you want to see or try to get if you had a preconception of what we were going to do? So feel free to get in touch with Matt or myself or your extension agent. They can pass the information along to us. But again, thank you very much for being with us this morning. And I will ditto Matt's remarks. We greatly appreciate all of our speakers this morning and our associations who are sponsoring this event for us. So again, thank you very much.